every single candle has a lean. So if I wanted to, for argument's sake, I saw some book buying coming in or whatever, and I wanted to try and find a lean here, I could simply just follow down on those sell offers and just get into one of the lowest sell that comes in, and then just say, right, there's a sell at 57 imbalance. I'm going to put my buy stop there at 66.6. The big 666. It's a sign of the devil, guys. Let's get into the long trade. Boom. And sure enough, the devil takes you straight north, and you rip the price right out of the park, off the bottom edges. So yeah, I mean, there's a trade everywhere. If you want to trade, you trade. There's no excuse for not taking a trade. Never an excuse for not taking a trade, because there's a lean on every single candle if you want it. And this is, I suppose, part of the classrooms that we did a while ago, was trying to get people to make sure they don't miss trades, because it's the cardinal sin of trading. It's the one thing that's going to get you sacked in this trading business almost immediately, is if you miss trades. They want to make sure you're dealing. So when you're set up to trade, what's the one thing we talked about? What's the one thing we taught you in the room ages ago? It's impossible to miss a trade. It's physically impossible to miss a trade. So what do we mean by that? So for example, on this trade here, it doesn't matter what it is, but on this trade here, for example, if I want to be short, I'm going to have two trades ready to go. So my first trade is going to be the sell limit order at the top edge. So if, for example, if I have a top line here and I say, right, I'm going to put a sell limit up here. So I'm going to have a sell limit order at that price. And then in this area here, my idea is that if I don't get filled on my sell limit order, I've got to get filled on my sell stop order. So we do a two-pronged attack into that sell trade. So if the value is going straight south, out of here, so that's maybe what the value is doing, I can't afford to miss that trade, right? Otherwise, I'm going to get booted out the job as quick as I can say booyakasha. So my job is to make sure I get filled. And how I make sure I get filled is by having a sell limit order and a sell stop order. So if I have a sell limit order and a sell stop order, I don't have any excuses for never being filled on that trade. So if I like the trade enough, I should have both orders in place, correct? If I don't like the trade enough, I might only have the sell limit order because I'm not willing to sell on a downtick. Well, you know, there's a question mark about that, because if you're not willing to sell on the downtick, why would you think that you've got enough value in the sell limit order in the first place? Surely your value must be really small. So what the hell are you trying to get that sell on the books for anyway? So there's a big question mark about not willing to sell on the downtick. If that's the case, you shouldn't probably not be willing to sell on the uptick either. So really, when you start getting into an area where the trade is 100%, I demand to have that trade on my books, I don't have an excuse. I cannot make an excuse to the guys upstairs that I'm not on the trade. Yeah, I didn't get, you know, I love the trade, so where is it? Good question. Do you not have the technology? Do you not have the ability to cross a spread and get that business done? Well, I don't quite know how to do that. It's called a sell bloody stop, you moron. Put a bloody sell stop in place. All right, that makes sense. I'll do that in future. It's too late. You're out. Beat it. Pack up your desk. Leave me alone and don't darken my doorstep again. Bloody hell. So yeah, we've got to be in the deal. We've got to be active. We've got to be in this area now. And this called working the level. So when we get the level getting worked, we want to make sure that we're working those offers. Whether it's on an uptick or a downtick or an uptick or a downtick, we've got to be working this area. It's not a single price. Why would it ever be a single price? Trading's not that accurate. It's not about single prices. It's about areas. It's about offers, offer watch. It's about putting in the trade when you want the trade and not having the bloody excuse that you weren't in it. You're always going to, if you want in it, you must be in it. Full stop. End the story. No excuses. Make sense? You've got to be in it 100% of the time. Because it's too easy. It's too easy. People making excuses. Oh, I never got the price I wanted. Did you have the value? Yep. Well, you must have got the price you wanted. if you weren't willing to cross the spread into it, what the hell? You never had enough value, did you? Interesting point. But I get it. So you've got to be on the deal. You've got to be on the deal. You must be on the deal if you want the deal. Simple as that. Yep, it's a good one, isn't it? It's a good one. Now, the one I'm interested in just now is this bottom line on bonds. Wonder if I can get in the deal, though. I wonder if I can get in this one. That's a hard one, isn't it? Now, it doesn't mean you're not going to miss, because sometimes what happens is when you're trying to think about a deal, when there's a big difference between what I've just said and what I'm about to say now. If you're thinking a deal's good and you're contemplating a deal, that's different from knowing that the deal's good, right? So I'm looking at a bottom edge bond and I'm thinking to myself, I like the deal, but I'm not 100% sure yet. If the trade goes away bull side on the bonds and I'm not on board, that's different, because I'm still contemplating the deal. I'm still analyzing the deal. I'm still thinking about whether I want the deal in the first place. And if I decide that I do want the deal and then it's gone already, well, that's different. You haven't decided when you had the chance to decide that the deal was good enough at that point. And as a result, you're obviously not you're not expected to chase the market, and that's absolutely fine. That's not what we're saying. What we're saying is, if that is a deal and you're definitely going to get in that deal, if you put a sell limit or a buy limit in place, for example, you must have the ability to cross the spreads now, because if you're willing to buy on the uptick, you must be willing to buy on the downtick. Otherwise, what the hell would you be selling on an uptick for? If you don't think it can go for an extra 3 ticks, why would you ever have taken the sell on the uptick? Madness, isn't it, when you think about it? Unless you're a 1-tick scalper. I don't think there's anybody in this room that's a 1-tick scalper. Maybe looking at your profit and loss accounts, maybe a lot of you might look like you're 1-tick scalpers. But anyway, that's a different story for a different day. You know the kind we're talking about, Kim, don't you? You know, the buyer gets into brilliant position, stops the break even, +1. As soon as they see a profit at 1 tick, oh my God, I'm in profit, I don't believe it, I'm taking it out, there's a buyer coming in, I'm taking my trade out for 1 tick, boom. Trade goes for $1,000, you make $10, boom. That always happens, doesn't it? That always happens. The 1-tick scalper brigade. Every retail trader's worst nightmare. Yep, I win 50% of my trades. 1 tick on every single one of them. But when I lose 100 ticks 50% of the time. So my account got blown out a few days ago. Yeah. We know that sort. We've seen it many times. The 1-tick scalpers. Well, it's full of them. Just waiting on this bond evolving. I'm not sure what I fancy doing with this. The 2s5s is definitely perky at the top line, isn't it? 2s5s is definitely perky at the top line. The 5s 10s is obviously running a little bit more sell side action than the 2s 5s. So I do like the sell at the top edges of the 2s 5s. It's just it's just been a little bit surprising at times about the quality of the sell that we've had on the 2s 5s, because it's never really lined up with the R squared. And for that reason, it's causing the analysis to be a little bit more awkward, which is why I'm not mad keen on buying up all of these bonds at bottom print prices and stuff like that. Anyway, cash open. Let's see what we've got from the cash open today. Let's see if there's any upside on this at the cash open that would help with the sell on bonds, at least temporarily.